All right. Thank you guys for joining me here. Thanks to everyone in the audience as well. Want to have hopefully a DePIN 301 level conversation. I think we've covered a lot of the basics, yesterday and today. We've got a bunch of smart investors up here that have done some deep thinking about DePIN, have some investments in DePIN as well. So looking forward to getting their perspectives on the sector that's captivated so many of people in crypto this cycle at least. So would love to just do quick intros from everyone on your fund, maybe any notable DePIN investments, and also something you either like or don't like about DePIN. And I would love for at least one person to say something they don't like or they wish was better in DePIN these days. I can start with Jake here.
Thank you for having me. Wait, is this working? Yeah.
Thank you. Yeah.
So I'm Jake Brookman. I'm the founder and CEO of Coin Fund. We are a 30-person crypto investment firm. We've been full-time in crypto since 2015. I'm the founder. I have spent most of my time in kind of early stage and deep tech side of blockchain. Investments in DePIN, well, one of the very early ones that we've done would be LivePeer. I think LivePeer launched their white paper in 2016, and 2018 they had their Merkle mine for their token, and then a more recent one we've done is Demo, which is a data union for electric vehicle data.
I'm Sam from Samsung Next. Samsung Next is an early stage venture and strategy arm for Samsung Electronics. We just have a mission to back the best builders and founders. Our fund started with a thesis in edge computing, which naturally kind of led into some early DePIN stuff. I think our first crypto investment in 2016 was Theta Labs. So they did do some distributed gaming rendering. Our notable investments now, IoTeX being one of them, and then as well Hyperbolic, which is distributed compute, and then MetaBlocks as well on the Wi-Fi side.
Hi everyone, my name is Omar Kanji. I'm a partner at Dragonfly. We're a cross-border global investment firm. We invest all across the ecosystem, from deep technical projects to crypto-adjacent projects and everything in between. On the DePIN side, we're obviously excited. I guess things that we're excited about recently, we have a company going live called Dawn, and then another one called Project coming out. So lots of exciting stuff in the DePIN space for us.
GM everyone, my name is Mehdi Farouk. I'm an investment and partnership manager at Animoca Brands. Animoca Brands is a corporate where we invest through our balance sheet as well as our venture arm. So we have done 540 investments. We are mostly known for gaming, but we also do invest in DePIN and infrastructure projects. Lately, we have been very active on the DePIN side of things. We have invested in IO.net, Peak Network. Recently, we also did a strategic partnership and investment with GeoNet.
Super cool. And then want to ask you guys next, who or what DePIN pilled you, right? Like everyone's got their own story about how they first heard about DePIN. It's probably some of the investments you've done, but I think DePIN has definitely taken the crypto space by storm more this cycle than any other cycle, right? We had to have the acronym be kind of put forth by Messari and then also adopted by everyone. I'm very glad we have one word to describe the whole space. But yeah, curious maybe, what was the point at which you all became very DePIN pilled on the sector as a whole? Can start with any of you guys.
Yeah, I'll go first. I think I got introduced to DePIN whilst I was reading blog posts from Multicoin. I hosted them for podcasts. Was starting to get interested in the sector. But the main aha moment for me was when we were accelerating a DePIN project called Humanity Protocol. And for me, it became really clear that this could be a large vector for mass adoption in crypto. Plus, there is real demand for different applications, both in Web 2 and Web 3. Within Web 3, the main demand sides were solving issues of bots on-chain, like for on-chain gaming, solving bots for just gaming, KYB for RWA, and also like solving Sybil airdrop problems. So solving those problems through DePIN principle excited me, and yeah, I fell in love and got down deeper into the rabbit hole.
Yeah, for me, I started my career investing in telecommunications infrastructure, and so the whole concept of DePIN naturally fit. I still have lots of concerns about the viability of the business models today and how they scale from a revenue perspective, but I think the underlying principle of subsidizing CapEx and in turn bootstrapping a network from there makes a ton of sense. And obviously there's lots of different shots on goals being taken place today, but as a concept, it just makes a lot of sense. Like, you are funding CapEx to create a real business that provides some type of real service to people that are willing to pay for it. And so intuitively, it all kind of just fit together.
I have the exact same story, as I'm sure most of us do, but I'd just add like the payments and the coordination mechanisms that you have an open public ledger to do the payments on as well. But looking from these physical infrastructure networks that otherwise you would need billions of dollars up front before any service is provided, DePIN just is a great opportunity for that.
It's interesting. I think that the term DePIN has come to encompass some networks that have been around for a long time. So what we used to call like resource networks. I mean, I think there was a storage network called StoreJ as early as 2015. We mentioned LivePeer, which came out in 2016. And so there's like this set of networks that are about computation or storage that today we refer to as DePIN, but have been around. But I think for me, the moment where it started to get really interesting was basically with Helium in 2018. Because at that time, there were a lot of questions around, like, what are tokens good for, like, actually, other than trading and speculation. And, kind of an early hypothesis there was that, hey, like, you can use token incentives to bootstrap networks, and in particular, the very hard problem of networks that have physical infrastructure. And Helium was a great example of that because they started manufacturing devices and essentially building like this telecom network, which if you weren't doing it with tokens, you get this idea that like, hey, maybe that would take billions of dollars to do. And Helium grew quickly and got to like millions of nodes globally through token economics. So I would say that's among one of the few real successes of tokens in general. So that's when I think things started to get quite interesting.
Yeah, same for me with Helium, I would say. Now I want to talk about maybe just how you guys invest. So I know there's probably different fund mandates up here, but specifically around investing in liquid tokens versus venture. Venture's probably typically earlier stage, right? It's pre-TGE. Like I said, you guys might have different fund mandates, but I'm curious, like, what do you see as the better investment vehicle? What do you guys prefer, to do liquid deals versus kind of pre-token venture deals?
I'll just say, I think like the middle, 90 to 95% of deals for us, they usually come with, an equity component and a token component. I mean, there are definitely like a few networks here and there where the equity like doesn't matter as much. I'm thinking like, I don't know, maybe Balancer, which is a DeFi AMM project, where they did have an equity component, but ultimately all the value captures in the token. But I would say like the vast majority is both, and in like a post-FTX world, I think people also want to see, kind of stronger governance on the equity side, so it makes a lot of sense.
Yeah, I think we only do pre-TGE investments, and primarily it's because we're looking for a strategic relationship with Samsung, and a lot of the token price fluctuation can distract, in our opinion, from the actual projects being built. So we like the equity and the tokens, but definitely pre-TGE.
Yeah, I think for us, we're pretty agnostic. It really depends on the stage of the business and what they are and what they're trying to do. I think to Jake's point, some of the equity businesses are actually like quite valuable today. Like, I think a big trend over the last 6 to 12 months has been real world equity business converting into a token business. And so inherently there's a lot more value in the equity than there is the token. I think a lot of stuff in the market today, the tokens are probably overextended. And so we don't really see as much value in making liquid token plays out there. But, it's obviously quite a cyclical market. And so I guess it just depends on the business and the project and the stage and what they're trying to do.
Yeah, with Animoca, we invest in both early stage as well as the liquid, and also we explore OTC markets. In terms of preference, we prefer tokens.
Cool. Okay. Yeah. So kind of across the board, got a lot of different takes on it. Omar, something you said about like equity accruing value versus tokens, and also like the types of founders maybe we see in DePIN. You said like there's a lot of, I guess, Web 2 businesses that are seeing value in a Web 3 model. I think that happens probably more than any other sector in DePIN, right? You have some kind of Web 2 industry veteran who's like built a successful SaaS business or some kind of real world business, and then now that DePIN's becoming such a thing and crypto's kind of back, they hear about DePIN, they're excited by it, they want to launch a token. So DePIN's very unique in that sense. What are you all looking for in a DePIN founder? Like, what are you looking for in terms of the founder and also the characteristics of the people on their team? Because crypto as a whole is very multidisciplinary, but I would say DePIN is even more so. So yeah, just curious what you guys are looking for.
Yeah, I think for us, we like deeply value domain expertise. It's probably one of the only things that matters. Like for a lot of the new style of DePIN companies that are coming up, they're like, as I said, converting equity businesses into token businesses. And so if you have the proof points of building out an actual equity business, then like we can help you with the crypto side of it and help you with the tokenomics and the go-to-market and all of the business development stuff that happens within this industry. And so we really, really just crave like a founder that knows their stuff inside and out. And if they have proven their ability to scale an equity business to even like, you know, from $1 million business to a $5 million business, then we're confident that as we provide them more capital to put into the growth machine, they can take that from a $5 million business to a $30 million business or $40 million business. And I think one of the things that's hard and one of the things that's really important is once you go into the DePIN game, you turn a local business into a global business. And so if you don't know your stuff across geographies, you're screwed from a scaling perspective. And so that's why we really, really like those types of founders.
For sure. Anyone else?
Yeah, I concur with Omar. Domain expertise and strong founder market fit, I think, is of utmost important. So I'll give you one example. A recent investment we did was GeoNet. Having a founder that has 20 years of experience in navigation is kind of an edge. You get, firstly, you have asymmetric information about the sector, which is difficult to replicate. You also have business relationship. I feel like in Web3, we are very good in supply side, but we are not that good when it comes to generating demand. So those founders that can generate demand, especially real cash flows from Web2 sources, I think that's what we feel is attractive.
Yeah, one thing to add is a lot of traditional Web2 enterprises actually don't like the crypto component. And so having someone that has this deep expertise in their domain that's respected for 20 years helps sell and helps you collaborate with these large enterprises that usually have the customers that you need ultimately. And so coming to crypto first with no domain expertise, you kind of can fail to capture the demand and customers.
I think the PI and DePIN stands for physical infrastructure. And so I think the kind of challenge of some of these things is like dealing with custom hardware, right, at the core of DePIN. Do you guys consider WorldCoin DePIN, by the way? Yeah, right? Because it is a network. It uses a custom physical hardware device and blockchain tech together. Maybe not in the same way as others do, but WorldCoin would be like a great example of an absolutely astounding team who built this device in like a year. The way they did it is they locked up like 100 people in a building in the middle of a forest in Germany and were like, you're not leaving until this device is done. But it has custom lenses, it has like AI, it has all kinds of software that has like never been written before. And it was like manufactured and managed to convert millions and millions of people just in the first like year or two of operation. So I would say like that competency is something that's really important, and we're generally not hardware investors, right? So if we're investing in something like that, kind of the hardware components and the team building it must be out of this world, which I think WorldCoin is. And by the way, it does not store your biometric data, just in case anyone was wondering.
Important to note. I want to segue based off of something you said and talk about the P in physical infrastructure networks. I think Omar knows where this is going, but if any of you guys are on crypto Twitter or DePIN Twitter specifically, you probably saw last week Hasib, who's the founding partner at Dragonfly, had a really interesting, thought-provoking, pot-stirring tweet about DePINs and DePINs that are more digital in nature, like computer storage, or more physical, so like decentralized kind of DoorDash or rideshare, or even some of these like telecom networks like Helium. So it got a lot of attention. I was also one of the people that kind of quote tweeted and wanted to like give my take on it as someone that's been in DePIN for a while. I think a lot of the DePIN founders also kind of quote tweeted it and stirred the pot. So Omar, I want to start with you, but just like, what did you think of that tweet? What's your personal take on it? Do you see kind of pros and cons to both digital and physical DePINs?
Yeah, first off, I liked the tweet. It was good. It stirred up some controversy. I think there's just like way too much nuance to actually like apply this in any form of like generality to the industry. Like it fundamentally revolves around like what type of business are we talking about? We could take something like an electric utility and power generation, and obviously like the more P the better because you can inherently generate more power. But there's other things that are software just scales much, much better than hardware businesses. And so I think Hasib's point is more along those lines, which is We like businesses that scale really easily without having to deploy a ton of money into the actual underlying infrastructure. And so, once again, lots of nuance, but I do think like the point being like some businesses are easier to scale than others. And if something's harder to scale, it probably has pronounced defensibility that the other business doesn't have. And once again, software, hardware, like there's some very successful hardware businesses like NVIDIA out there. And so very much depends, but yeah.
Yeah, I'll take the other side of the argument. The bigger the PE, the better. I know there's a lot of nuances, but what happens with the digital resource network or virtual networks is you do get that network effect very quickly, but having the defensibility, especially in Web3, is difficult. And I feel with the physical side of things, you get that moat, you get that defensibility because network replication is difficult. And because of that purpose, you can have a pricing power and you can dominate the category. So for me, again, depends on your risk preference. There is a winner-take-all dynamics on the physical side. On digital side, you can have more than one winner. But if you're really going for that outlier return, I feel like if you pick that one winner on the physical side, I think you're going to do well.
I'll take the middle of the argument. I think that kind of the underutilized resource in DePIN is existing infrastructure. And so if you already have a Wi-Fi node or router in your house, providing that as a public network, you can scale much more quickly, have a physical component without actually having to buy a new piece of hardware. And then as well, like everybody or most people have a doorbell camera. And then there's also camera companies like Flock Safety that are providing public service cameras, is tapping into the existing infrastructure that's already there to basically combine it into a more cohesive network.
Are you violating any TOS though if you're with your internet service provider?
You just click accept all terms and conditions.
I mean, I think you guys covered the spectrum of views here. I'll just say I probably think like, that particular choice doesn't correlate with success that much, to Omar's point.
I'll add one more on the hardware side. So in the US, we have Comcast, and they have these physical boxes that they now provide for free and stand up a public Wi-Fi network without the user knowing, and you can't turn it off unless you buy your own. And so they were kind of trying to do similar to what some of the Wi-Fi related ones is you already have a piece of physical hardware for a certain purpose, your own personal network, and they can extend it to public as well.
Yeah, I think good point, Sam. I mean, good point, everyone. But I was going to talk about the latent supply versus net new supply as well. Like when you have to build a custom device first and then also convince people to buy it and set it up, that's like a pretty large obstacle to overcome versus just like tapping into supply of computers or dash cams that are already out there, for instance. Another thing I want to talk about is low float tokens, but specifically within DePIN. So I think DePIN might be a bit unique in the sense that the emissions schedules are usually, it can be 10, 20, 30 plus years long. We're trying to build real world infrastructure here. It takes a while. There's also a really big component of like a token incentive, especially to build out the supply side. So oftentimes I feel like DePINs are subject to kind of having this low float problem, and obviously the market doesn't love that, especially from an investor perspective. So I'm curious how you think about low float tokens within DePIN, if there's any solutions that come to mind immediately. Or are you just okay with it?
I can take this one. So I think if you think from first principle, on DePIN side, low float actually makes sense because you don't want that oversupply of tokens in the initial phase, or else instead of the flywheel moving on the positive side, you have a death spiral. But high float in some of the other sectors like gaming or infra might make more sense. I think bigger issue than this, especially within DePIN, is that a lot of the exchange listing managers take off. We basically follow crypto Twitter, so I think the DePIN sector in itself is not as hyped as some of the other sectors out there. So I think from my perspective, I think that's the major issue for DePIN than, let's say, low float.
Yeah, maybe just adding to this, I like totally agree with that point of view. I think especially when you're trying to build like these types of networks, you want the scarcity to be there at the beginning stages of the network so that people are incentivized the most up front when it's the most risky, and then you want obviously that to fall away over time. I think, the other point too is that the low float, high FDV is more of, I think, the argument than the low float in and of itself, just as a principle. And I think that's just like market forces, and over time, I'm sure everyone has different views, but I think over time, obviously those things correct. Things are subject to hype cycles just like everything else, and over time, like valuations that people can buy these tokens out in the public markets obviously change.
Yeah, I'll just add, you almost want the speculators to come in. You hope that people think your network will be valuable at some point. You just have to be careful on when the supply is so low. It really comes down to the supply and demand causing kind of these self-reinforcing cycles that can be quite negative for the projects. But you want to have incentivize some of the speculation to essentially help pay for the infrastructure in the early days.
Yeah, just to maybe like expand on that, like my experience is that DePIN networks, like a lot of decentralized networks, like they're all waiting for demand side, right? And like I said, LivePeer came out in 2016. They were in production in 2018. I think they had like a full MVP early 2020. It's been 4 years. The utilization of LivePeer is relatively low, surprisingly, because they offer a transcoding service that is 10 times cheaper than Amazon. But it turns out that like vendors don't necessarily use only that dimension to make a purchase decision of such a product, right? And so kind of the history of DePIN networks is that there's a very long kind of like adoption cycle for them. And like in the case of LivePeer, it's years and years, right? So I think it's a fact of life that these token economics have to sustain those supply sides kind of as long as possible until the demand side comes. And if the cost of that is a low flow token, then that might just be the cost.
For sure. Yeah, that makes sense. Question about just the upcoming U.S. election. I'm also personally curious, like you guys' thoughts. It seems like I would assume everyone here spends a lot of time on crypto Twitter, probably in the audience as well. It seems there that the election is going to be this, huge, impactful thing for crypto. Do you think that's kind of overrated or underrated in terms of the election's impact on crypto? Are we going to Goblin Town if Kamala wins? Are we going to Valhalla if Trump wins? Like, what are your guys' thoughts on that?
My view is that it's definitely like an important sort of decision point to get some clarity on kind of where we're going to go. And as you can see, we've been in this sort of like prolonged, almost 3-year bear market, and we're still kind of going sideways. And I think a lot of that has to do with like the uncertainty of where we're going to end up in the U.S. That said, I think crypto is going to go up regardless of who wins in like the medium term. I think if Trump wins, I think it's going to have more maybe an impact on short-term sentiment, and it's almost guaranteed that kind of the SEC will be reformed, which will be very bullish for crypto. And that's probably the only thing we can say with certainty about that set of promises. But I also think like the Democrat side, which has been less friendly, what's not talked about as much is that there are in fact many, many Democrats who are open and even positive on crypto. And you can see that by looking at who signed like the FIT21 bill, for example. It's a substantial number of them. I think there's other factions in the Democratic Party that are like pro-crypto. I think even in Kamala Harris's administration, there's a division between sort of like Warren people and Obama people, of which one of them is like neutral to open-minded about crypto. So I think even if the Democrats win, we're actually likely to see legislation anyway. Chuck Schumer has said on the Crypto for Harris call that he wants to see stablecoin legislation before the end of the year. Let's see it, Chuck. But I think crypto is going up either way. The question is like how fast.
Yeah, I agree with that. It feels like if we get more of the same, it'll be a slow and steady grind, maybe a little harder for the US-based companies. I think to your point earlier about these like enterprise adoption of certain services that might be cheaper or better, there's this regulatory overhead that nobody wants to get fired for choosing the crypto project over the Amazon or any of the Web 2 counterparts. And so I do think getting some more clear regulation will be helpful and accelerate both the adoption and hopefully the prices as well. But I think it's probably a little bit underrated how impactful clear regulation and I would say more general support for crypto could be.
Yeah, I think over like 10 years, we don't really think it matters. I think over a year to 3 years, we do. I think with one regime in particular, obviously like things are a lot more challenging, especially for tokens that have some type of cash flow distribution back to token holders. We'd love some form of regulatory clarity and a set of rules and a framework that those types of tokens can operate within, because then it looks and feels analogous to traditional software investing. And so we would love that. And obviously like for a lot of the companies in our portfolio, we definitely advise them to move offshore just so they don't have to deal with some of the uncertainty here in the U.S. Back in the U.S. And so we think it definitely matters in the short term over the long term. To both the earlier points, we think the industry is going up, and I think in the medium term, even with or without regulation, there's certain aspects of the industry that will look for product market fit and DePIN, for instance, that regulation almost doesn't matter. It's just finding the right end markets to serve and the right customers that drive adoption.
Yeah, I agree with the panelist here. Due to the uncertainty in the US for the last couple of years, what I personally saw was, I'm based out of Dubai, so what I personally saw was Dubai taking advantage of that opportunity and cannibalizing some of the mind share and also some of the capital from states. So I think in the long time horizon, it really doesn't matter.
Yeah, no, it makes a ton of sense. That's all the questions I had for you guys. If anyone in the audience has a question or two, we do have a few minutes, so I can open the floor to you guys. If not, we can wrap. Any questions? Right here?
Small question. Any specific services or sectors within the DePIN space that you feel is too crowded, like it seems so far?
Okay, I'll take a shot at it. I mean, like, there's obviously lots of stuff going on in telecom. It's like probably a good category to say that, like, on the outside in looks crowded. I think on the inside looking out, it's actually not that crowded because everyone's still trying to scale a business within the vertical. And so to answer your question, I personally don't think there's any that are too crowded. I think what's really nice to see about the industry, and especially how it's evolved, especially with respect to DePIN, is there's lots of shots on goal being taken right now. And inevitably, one of those or a number of those will end up being successful. And so crowded industries are almost better because you can actually cover the range of potential outcomes.
Yeah, I was going to say, like, it's so early stage in DePIN for any of it to be crowded, but like telecom is probably the vertical within DePIN that has the most startups, and I would say energy is probably a close second, at least recently. I mean, both are huge markets, like in the traditional world, but I'm hearing about a new energy DePIN launching pretty much every day these days. Any other questions in the audience? Okay, I think we're good. Well, thank you guys so much for joining me. Thank you to the audience. Appreciate it.